Mriganka Jaipuriyar of S&P Global Platts, joining us right now on the phone line. Thanks very much for joining us, Mriganka. You heard, the OPEC Secretary General. He said things are under control. Supply is not going to be a constraint, and there will be use of reserves if required. Do you feel that this could probably lead to some stability? Because we've already seen crude oil prices coming down from the highs of the day.
Absolutely. I think the first thing I would like to say is that there is no immediate supply risk. Saudi Arabia has assured all of its oil customers that it will be meeting its export commitments from stocks, even if it's not able to resume production straight away. If you look at the stocks at the top Asian oil buyers that import crude from Saudi Arabia, stocks they do have ample stocks, and Saudi Arabia holds stocks in Japan, so it's easy for Saudi Arabia to supply its Asian customers from the stocks that it holds in Japan. So there is no immediate supply risk. What we are waiting for is an update on the extent of damage, the duration of the shutdown, because that could change things significantly. If it is a prolonged shutdown, what that means for the markets could be very different from where we are sitting right now and seeing what's happening. The other thing that is extremely significant is the geopolitical risk premium that is now going to play into oil prices. Over the last few months, the market has overlooked this geopolitical risk premium. Focus has been entirely on demand growth concerns. But with an attack of this scale, an attack on what is considered to be one of the world's most secure sites, and the significance of the attack in terms of the processing plant processes 7 million barrels per day. It is Saudi Aramco's largest oil processing plant. The Khurais oil field is the second largest oil field in Saudi Arabia. The extent and the significance of the attack is very high, and the impact geopolitically on oil prices will be quite high going forward.
For India, Saudi Arabia, I think, accounts for about 15.6% of the overall consumption. Middle East as a whole accounts for about 53.6%. So in light of that, there is enough and more from an India perspective in terms of supplies, right? And we've been hearing conversations from major oil marketing companies here in India, considering we're the third largest importer of crude oil. It's crucial to see whether our supplies are intact.
I think for India, right away, the concerns are not... India has diversified its supply sources quite significantly. I mean, Asia as a whole has diversified supply sources quite significantly. So for now, the concern will be more in terms of the impact on prices, because as prices go up and you're facing a not so strong economy, it's not going to be good for the economy and what that means for demand and so on and so forth going forward. But the immediate supply side concerns would not be too high at the moment, simply because of the diversification efforts and the fact that India can still buy oil from South American countries, from the US, and the Indian refiners have been trying out a variety of crudes at their refineries.
Just one last question from my end is, where do you see oil prices stabilizing? I mean, do you see them, hover around $70 per barrel for the near term, at least till some more clarity comes about with regards to when production can actually start from the Upquape facility?
Yeah, I think, Platts Analytics is expecting prices to be in the high $70s. And the reason for that is also we are entering a period of balances tightening. With IMO 2020 coming up, demand for crude is expected to go up. So we're generally entering a phase of tightening balances, and then to have this sort of a supply disruption. And like I mentioned, the geopolitical risk premium, I mean, this just goes to show how vulnerable Middle East supply can be and how quickly spare capacity can get eliminated. Platts Analytics estimates spare capacity to be 2.3 million barrels per day, and of that, 1.6 million barrels per day sits in Saudi Arabia. So we are expecting to see the geopolitical risk premium come into prices. So we're looking at about the high $70s as we go forward.